All right. Good morning, everyone, and welcome back to the UK live session. It is Monday morning, 27th of November 2017, and let's get started off with a few chart reviews, brothers. We have mostly carried forward trades from last week, and let's touch base again on those trade setups. Beginning with the euro, let's discuss the wave counts slightly on the longer time daily chart view. We got waves 1 and 2 respectively. Still we are mostly considering the rally. We believe that this is an extended third wave, wave 1, wave 2, and then 1, 2, 3, 4 and 5. Could be wave 3, 4 and 5, right? So two cases which are still coming up or probably coming up are we have wave 1, 2 and 3. In that case that could be wave 4 defined as wave 4, and maybe wave 5 can print one more high about 2100, or you've got wave 1, wave 2, 3, 4, 5 already in place. It looks more unlikely for the second probability, but not ruling out that as well. In that case, we are going to expect a much deeper correction into wave 2, which can take prices all the way towards 1.1. Alright, so finding out the most common wave probability is, I think we can go on the 4-hour chart and find out possible the help of the Fibonacci ratios and the trend lines, etc. I think we'll be able to find out much more about what euro could be probably doing this. Now the resistance has been taken first. Initial resistance around 1900 was taken out on Friday. The next is coming at 1.202530, and another one is 2092. If you look at the movement since last several hours, it looks to be sideways. What it means is there might be one more high printed before euro could cut loose on the south side. Now that's the Fibonacci numbers. It's already crossed about the 61.8%, pretty close towards the 786 at 1975. Not ruling out a push towards those levels as well. Alright, if we look at the extensions of the counter trend, alright, let's do the counter trend extension, and then I'll come back on the wave counts on the 4-hour chart as well quickly. A more realistic and probable wave count is coming up. A high probability wave count suggests that there might be one more high in the euro before it turns lower again. There you are. V2 count. Let's simplify the counting here. Let's do the entire drop as wave 1. Right, I'm not labeling, not much time here. I hope you must have gone through the first educational session, and we'll be doing a lot of talking over there. Then the rally towards 1850-60 was wave A, B, and wave C is still underway. Could be pushing one more time towards the 1970-75 mark. And this is what I wanted to highlight. 1977 is Fibonacci correlation as well. Right, so a wonderful Gartley structure still probably on the way. An up Gartley structure is just on the way. You have down boundary ready, and then a counter trend ABC should be hitting towards 1.1977 and then pushing lower. Right, this is what is the base structure. So as far as the trade setups are concerned, we are already short, suggested shorts from 1870, 50%, remaining 50%, around 1970 prices managed to reach there. So one half has been already sold around 1870, remaining half around 1970 prices reach there. You can have your stop loss around, ideally should go around 2092, or the second best position is 2030, right? Either about 2090 or about 2030 should be a stop loss, and the take profit levels way below 1.15. All right. So that's the trade setup in the euro dollar index. Now I like this chart. This is a very good story, actually, a very good story in the making in the dollar index. Wave counts are pretty much clear, and that's why it becomes easy to handle euro as well sometimes. So we've got waves 1, 2, 3, 4, and 5. That gives us an impulse, followed by a potential ABC, or it's already 5, and we have got A, B, and C. Sorry, wave C can maybe go and print new low around 90 to 60. The reason being, that's the Fibonacci 61.8% of the entire rally between 91 and 95. All right. Moreover, the past resistance becomes future support around the same price. All right. And the counter trend rally extensions are also almost reaching around 90 to 60. So all in all, we are already long from 93.25, 50%. The remaining 50% around 92.60, 92.80. The higher trading range has already been triggered, and strong support is seen at 91.50. Ideally, you should be remaining. You should keep your stop losses around the 91 mark. All right. So, all in all, a wonderful up Gartley in the making. Euro USD is the down Gartley in the making. And please have patience, brothers. This week might not be the turning point. I repeat, maybe this week could not be the turning point. By the end of this week, yes, there should be some bottom forming, major bottom forming in the dollar index. Which takes us towards new high, probably taking us towards new highs in the month of December. Right, so please hold on to your longs, and should be having some more patience for holding those longs. It will take some time to materialize, I think. Another way to deal with that is the MACDs and the RSIs actually both looking good on the north side. Look at the RSI 28 again. So divergences on the display as well. Alright, so euro on the short side, dollar on the long side. We've got gold to be discussed. Believe it or not, gold is sideways, and it could be making, or it could be wanting to push one last time maybe, since it's not dropping lower below 1270 or not breaking below that support here 1275. That what it means is maybe it's looking to push one more time towards maybe 1299 1300 mark, or even just go and test around the 1306 levels, and making it as a flat, an A B C flat before dropping in lower. So all in all, even in gold, if you look at this week, maybe it could remain on the bullish territory. We are already short from 92 93. We want to sell on rallies, and the risk is just about 1206. That's around 1307 is our stop loss. So but looking at the entire wave count, that's 5 down followed by 3 up, maybe 3 down, and I strongly believe that could be an ending diagonal which is already completed and prices should drop lower. But if I'm wrong, as an alternate, be prepared for one more high towards close to 1300 levels, brothers. Alright. All in all, selling on rallies remain very much on the cards. Alright. Okay, trade number 4 which we are actively looking at is crude oil, and believe it or not, crude oil is now cutting loose on the south side. We have been waiting for this to happen, and it's also kind of producing a Harami candle, HARAMI. Let's see how the daily chart closes. But even if it closes around these levels, that's going to be a perfect HARAMI candlestick pattern for a bearish reversal to be due in crude oil. Alright. One more important point to take note is that crude is topping just around the price range of the previous wave 4. They were 1, 2, 3, 4 and 5. That's the entire wave 3, and that was wave 4 within the past wave 3. Prices are just about finding resistance around the previous wave 4. So watch out for a bearish reversal. Another point to be noted down is the oscillators, MACD and the RSI. There is a lot of bearish divergence which is witnessed, which is clearly witnessed on the RSI. There you see, typical property of the fifth wave producing a bearish divergence. That the entire structure here is an ABC actually. That's an ABC, and overall it has formed again a 3-wave structure: A, expanded flat B, and then C. Running flat B. So all in all, it is 3 waves. So corrective rally, and if this wave count is true, then and if you are selling crude, please sell with a long-term view, at least a medium-term view, which takes out 55 So if you are an aggressive kind of a trader, you would sell now or remain short with a soft target of 55. If you are a conservative kind of a trader, you would want to wait until 55 is taken out, and then you would want to sell again on rallies. Alright, that's the trading strategy in crude oil. And then we also have pound, which we are closely looking at. In fact, pound has been forming or going sideways and forming wave 4 actually for us. That is wave 1, wave 2, and then entire drop can be termed as wave 3. And then look at that wave 4. I mean, it is a WXY kind of a deal, but to simplify, the first leg A, the second leg B, and the third leg C. No way it is coming around the vicinity of the first wave. So all in all, wave 1, 2, 3, and then ABC wave 4 in the making should be giving room for wave 5, which is expected to take out 2800 levels out there, 2771 to be more precise. And I would like to do a Fibonacci count as well over here. I'm going to extend waves 1, 1 and 3, the distance traveled by from waves 1 and 3. And if you look at that closely, the 38.2% should be the termination point of wave 5. And that is very close towards 2800 levels, almost 2787. Alright, so hang in there, brothers, on the south side. Alright, euro short, pound short, dollar index, we are looking on the long side, gold, we are looking on the short side, and crude oil, again, we are looking on the short side. Alright, so I think that would be enough in this session. With this are the 5 instruments that we are looking. If you are interested in getting all the trade updates, maybe sometimes early profit booking or whatever, please log in or join in our Telegram channel, which is absolutely free and complimentary. It is just because of the passion and your support of divine grace this is happening here. I never thought I would be doing this. That's the Telegram channel. You can search for my name, Japee, and please join in there. And you can also write to me at harshjapee at yahoo.com. Watch out for this website. It is just a page I've made on Google business.site. I think I'll be posting much on the site later on. This is just a beginning, a humble beginning, I should say. Alright, so that's it for now in this session. Once again, thank you very much for joining in here, and look forward to see you in the next session after a few hours. That's New York live at about 8 AM Eastern Standard. Until then, please take care and God bless, brothers. Goodbye.